Lesson 8.1 Combining 4 or more indicators. In this part of the 8th video lesson, we will look at a practical example in which trading signals simultaneously coincided when using technical indicators MA200, fractals, stochastic, and MACD on the basic settings. But this example will be considered with the step-by-step addition of indicators to the price chart. First of all, I will draw your attention to the placement of the price relative to the moving average with a period of 200. At the moment when the price reached the point A, it was under the moving average with a period of 200. This indicates the presence of a bearish trend. And as a result, at this moment, the trader needs to consider only those trading signals that confirm the ability of the price to continue falling within the main trend. Based on this, at this moment, the trader needs to get a trading signal to sell. This signal can be considered the presence of a resistance area formed by fractals and marked in yellow. At the same time, it is important for the trader to understand when exactly he can open a short position. That is, after the second, third, or fourth fractal appears. To do this, you need to add another technical analyst tool to the price chart. In our case, it is a stochastic. When the trader added the Stochastic Oscillator to the price chart, he received a trading signal indicating that this asset is overbought. As a result, this trading signal can be considered the signal that indicates the need to open a short position at the very moment when the price reached a point A. As at this price, fractals 2 and 3 were already formed, indicating the presence of an important resistance level which the price cannot break through. At this stage, the trader has already received 3 trading signals from the 3 different indicators, indicating the ability of the price to continue falling within the main trend. And after that, it's time to add another technical indicator that we are already familiar with, the MACD oscillator. After the trader added the 4th technical indicator to the price chart, it is also confirmed the advantage of sellers in the market. Since the histogram columns are in a negative area, in other words, exponential moving averages with periods of 12 and 26 are crossed in such a way that the slower EMA is located below the faster one, therefore confirming the advantage of sellers not only in the medium term as indicated by the MA200, but also in the short term. At the same time, the trader can use any 3 technical indicators as the main ones, and the 4th as an additional one, since all 4 indicators allow you to get a unidirectional trading signal too rarely.